What do you think is the biggest opportunity in the market right now? Is it PayPal?
Whew, I think PayPal is the easiest money in the market. I mean, there's a lot of opportunities obviously in the market, and they all come with different risk profiles. There's some that are super risky stocks that they have 10x type opportunities, but they're taking an immense amount of risk. PayPal is one of those stocks that I just look at it and I'm just like, if I have money in that stock for the next 3-5 years, I'm not worried at all. Can it go down? Sure, all stocks can go down, but looking at the valuation, looking at the growth rates, looking at all the different growth levers they have for not just revenue, but really the bottom line. Yeah, I feel pretty good about that one. Very competitive space, obviously, but the same could be said with pretty much every space is very, very competitive. PayPal, the first one that comes to mind. Going into this year, Tesla was actually very attractive, but obviously the stock's gone up a lot.
Yeah.
Amazon was very attractive going into this year, but that stock's kind of gone beast mode a little bit here. So yeah, PayPal right now, I think is probably the best risk reward in the stock market in terms of like thinking about, am I going to lose 50% in the stock and what's the chance I double up my money in the stock over the next few years? I'm pretty sure you're fairly bullish on PayPal as well, right?
I only recently got into PayPal. I actually don't own shares. I just own leaps on PayPal. I can have a more margined out bet. I can make outsized returns with relatively controlled risk on the leap side. And so I just generally am dipping my toes in because PayPal for me, for example, is just a trade. I recognize the opportunity, but PayPal personally is not a company that I want to be owning for 3 to 5 years. It's more of 12 to 24 month or even 36-month turnaround to see if they can double up. If I get 50 or 60 or 80 or 100% gains, I'm in and out. And so it's a swing trade for me more than anything else. Is that similar to how you're seeing it, or are you comfortable holding for 3 to 5 years right now?
I should be comfortable holding for many years. Obviously, we'll see how things develop with the company over time, but I should feel fairly comfortable. But I do understand kind of where you're coming from. And even we had somebody in the private stock group that was talking about, we were in the PayPal chat, they were mentioning exactly like you. They're like, I'm playing leaps on this one. I don't want to own it long term, but I do believe it's going to, have a nice next, 12 to 18 months out. I don't have a super strong opinion on the very, very short term around PayPal, but I just know I feel comfortable given the PE ratios, given the growth rates. If, the company ever starts shrinking revenues, that's a whole different scenario. But as long as they can continue to pound out growth for the next several years, I'm very, very comfortable with that position.
Is PayPal what you're adding the most heavily right now, personally?
Certainly of the last couple months here. Yep, that is the overwhelming favorite at the moment is PayPal. I'll probably slow down my buys on PayPal in 2024. I still got at least a few more months of adding to PayPal pretty aggressively.
When you think about your DCA, is it more of, I'm going to buy from September until the end of the year, regardless of price? Or is it more if it hits $70 or $75, that's like my stop? That's my margin of safety area.
Yeah, for me with PayPal, anything under 100 is a buy for me. Yeah, so unless PayPal just goes beast here or suddenly, like I should have at least the remainder of this year to add PayPal. Yeah, so and then I'll probably be about maxed out on PayPal shares because then I'll have a really good sized position. So I probably won't want to take any more risk in it because at some point you get to a point where it's not intelligent to continue to add risk.
The last question I have on PayPal, just because you said you'd be a buyer up until 100, what really is your profit taking range for this? Like, where do you see this going?
Whew. I mean, I think it could be a $200 or $300 stock again. I really do.
3 to 5 years?
I think in the next 5 years. Yeah. My thought around PayPal is if they keep posting, let's call it high single digits or low double digits, let's talk about, revenue growth. They believe they're going to be able to do a even bigger number on the bottom line. So let's say they grow 10% a year for the next 5 years, average revenue. I think they're going to grow more than 10% bottom line. That puts us the situation where you're going to have to, at some point, give this company a much bigger valuation than you give it in terms of PE ratios. Like, company trades, I think 11 times next year's numbers, 2024 numbers. That just doesn't make a lot of sense, in my opinion, for a company that's growing the way PayPal's growing right now. Now, if their growth rates ever stall, if they ever start going backwards, revenues ever go down, net income goes down, obviously that $200 to $300 price isn't going to work out, right? But if this company just pounds out solid numbers, they don't ever have to be the company that's growing revenues 20% again or 30% to reach the sort of valuation I think they're going to over the next few years. So that's kind of where I'm at with that one. And that's just why it's such a attractive kind of risk reward. And then I think about, okay, what are the chances it goes to 30 over this next few years? That's another thing I think about, right? Like the chance I lose 50% in the stock. There's only one of two ways to get there. One is the valuation gets cut in half over the next 5 years and it's trading at a 6P or a 5P. That doesn't make a lot of sense. Or two, the company just completely falls apart. Their revenues plummet, their net income plummets, and their valuation plummets. And it just doesn't seem like that's that realistic. So I'm willing to take that risk.
Do you have any opinion on their new CEO, Alex Chris?
He was a very important individual at Intuit. And I mean, Intuit's one of the best companies, you could pretty much ever invest in over the past 10, 20 years. And he comes from a company that is loved by Wall Street. Intuit's one of the most loved stocks. I don't want to get my hopes up too much, because you never can in terms of these management teams. Because there's a good example of Walgreens was a stock I was really excited about when Roz Brewer came over that company. She was a very well-established executive at Starbucks, worked super high up. She was like the number 2, number 3 at Starbucks. She was CEO of Sam's Club. And I'm like, oh, she's going to come in and do a great job. Well, she just, left the company, Walgreens, and failed. And so that's why you never want to put too much weight in these new individuals. Let it play out. Let's see how the numbers are at this time next year. And, then we'll be able to start to judge, is this man doing a great job or is he not doing a great job? At least for me personally, I can't speak for everybody, but for me personally, I don't ever want to get overexposed to a stock. That's how I always remain in a pretty good place for my portfolios, because there's so many people that take so much, and I know there's a lot of people out there that do this, where they put, whatever amount, a big, amount in one stock or 2 stocks.
Man, you're preaching to the choir. I got 50% in Tesla.
Yeah. So, that's one of those that it definitely gets really, really risky, really, really fast. So I never like to have one stock make or break. That's the biggest thing for me personally. It's because it's not a good feeling, But the good thing for you is at least you have it in a large company, not a smaller company. But yeah, because and I've been on YouTube since 2016. The amount of times I've heard if that stock goes down, you're ruined. And it's this is one position of many stocks I hold. If it doesn't work out, it doesn't work out. I'll take my L and move on.
Yeah, and ultimately, the reason I came to this conclusion of allocation is I used to have a more diversified portfolio, but right now I'm at a stage, Jeremy, where I'm massive wealth accumulation phase. I'm 29. I plan on DCAing regularly for the foreseeable future. The portfolio has gotten to a place where it's definitely scary. It's like my monthly salary every other day. But at the same time, I think the cognitive load distribution is much more preferable this way. In other words, I cannot keep up with 20 names, man. I just can't do it. Yeah. But I can be an expert in 2 names, and I can go down rivet by rivet in terms of Tesla and SoFi and break down every single piece of micro news that was posted on a blog post about either of those things. It's that Warren Buffett thing where he's like, hey, it's fine to put all your eggs in one basket. Just watch that basket really closely.
Yeah, so I definitely sympathize with where you're coming from. I remember, when I worked at Quick Trip as a manager, working, 46 to 50 hours a week. Yeah, back then in those days, I never owned more than 10 stocks. I was almost always in 4 to 8 stocks most of the time, because I felt like back then, and remember, this is back in my early 20s too, so I was kind of in a similar phase to you, just before I had kids, before I had a lot of things. So yeah, back then, man, it was just, there's no way I could have probably kept up the way I do in the market now. Now my whole life is focused around the stock market, so I can listen to a million conference calls and do all these things. But I understand when people say, man, I just don't have the time to keep up with 20 different stocks. It's unrealistic. Or to look into 5 new stocks a week or something like that. I just can't do it. In respect, I understand that, because if you work a job, you work 40, 50 hours a week, and especially if it's a demanding job, you need a certain amount of break, zone out, whatever it is. Some people watch Netflix, some people watch TikTok or sports or whatever. So you need that certain amount of just unwind. And then maybe you have 10 hours a week to maybe put into stocks, maybe 15 hours, something like that. But it's not like you got 40 or 50 hours to put into stocks. So I definitely understand that and kind of sympathize with that viewpoint.
So a couple things on that. I would say that new people entering the market right now, and they ask me what they should buy, the default answer that they usually get is diversify. And if they have 10 or 50 or under 100K, I would say, just max 5 positions. Whereas myself, I over diversified up until 100. And then 100 to 200, I was just like, okay, I want to limit this down to having a good amount in maybe 6 names or so. And now it's just, I'm past the 250 mark, and I'm like, okay, I have 6 figures just in Tesla alone, right? And so I've sort of done it the opposite way, where I've gotten way more concentrated as my total portfolio gets bigger, and just because I want to let the winners ride. And it's like the Pareto principle, right? Even if 90% fail, my top 10% convictions will pay off for all the winners in the future. I think my risk tolerance is really large because my time horizon is really long. So that's the one thing I'll say. The second thing I'll say is content creation, and having this YouTube channel has forced me to watch over my Tesla and SoFi position like a hawk, just because I need to make content or else the YouTube algorithm is going to punish me. And so I'm like, okay, what do I do for content for SoFi? It forces you to go into like super rabbit holes.
Yeah, 100%. I definitely can understand that. Sometimes it's healthy, sometimes it's not healthy.